It's time for Let's Get Real with your host from Bob Richards and Associates, Bob Richards.
Well, hello, Mr. Bob Richards.
Hello, Michael. Good afternoon to you.
And a very pleasant good afternoon to you as well.
Thank you.
I'm excited to be here today.
Yeah, me too.
I've been looking forward to this all day. You are the bright spot of my day today.
You are so kind.
I hate to put that pressure on you,
Yeah,
but, you know.
really, I'm going to have to do really good on this podcast
So don't mess up today.
No.
You could ruin my whole day.
I could. Got to keep it up and going.
Oh, my gosh.
Going good.
Well, Bob, I have something very special to talk with you about today.
Okay.
I know that there are some common mistakes that first-time home buyers make, and I think that we should just review a few of those. I think the number one mistake that most first-time home buyers make is they forget to call you.
Yes.
They just need to call you.
Exactly. Problem solved.
Problem solved. It's just one thing that you need to do, and then you'll be fine. That's the only thing. So after they call you, what are some other things do they just show up and they go, Bob, where's my house?
That's right. Where's the front door? Where's the key?
Yeah, and you go, well, how much can you afford? They go,
Exactly. What does that mean?
What does that mean? So tell us about that.
You know, it's really interesting, Michael. A lot of people think that with borrowing money, that it's just the same as buying a house, as well as the same as buying a car.
Yeah.
Where you just sit down, you fill out an application, they have in-house financing, sign here, here's how much you need to bring, and it's a few $1,000s, and there's the car. Here's the keys, and out the door you go. Financing on a mortgage for a home is significantly different, and let's get real about this. Today's buyer, whether it be a car buyer or a home buyer, they don't take into consideration all that this encompasses and what this includes that has to come out of their budget, and it may kind of cripple them a little bit. And what I mean by that is it depletes their savings to where they're unable to have rainy day fund, emergency fund. I'm a big Dave Ramsey proponent. I'm one of his trusted ELPs. And he wants you to get out of debt as quickly as possible. And maybe the only debt for short term would be your mortgage debt. Cars are paid off, credit cards paid off, etc. Well, even with that being paid off and you still now have your only debt service of your home, what else could come around? Could the AC break? Yeah. Could the furnace break? Yeah. Could an appliance, water heater, pipe, electrical issues? Yeah, absolutely. Could the place catch on fire? Yes, it could. There's just so many other contingencies that first-time homebuyers forget that they need to include as part of their budgeting as they go along with this process.
Yeah, I remember when there was a time when my wife was selling new homes, and she was amazed at the number of people who would come in to buy the new home, and they would forget about a lot of those things. And it was kind of like, well, this is the payment. And she told me one time that the guy was all excited about this, and the wife goes, but honey, so I don't know if that leaves us enough money to buy food. So you kind of need to factor that into the overall budget. Oh, don't worry, we'll be fine.
Rice and beans is okay.
Yeah, we go to my parents' house. But they just don't figure those things out. It's like, budget. What's a budget? This is the payment.
No, it's so true. And when people are in this kind of economy where it's the here and the now, got to have it now. I remember my folks taking almost 30 years to having one of these substantial homes that you might find out in the south part of St. George. And these are folks out there that are in their 20s, early 30s, 2 Escalades, $200,000 boat, $200,000 pool and backyard, and $800,000, $900,000 or more house. And I'm just like, how in the world can you do that? It's almost like paycheck to paycheck. What happens if there's a hiccup in their budget, if there is one in their home? One of the other things, too, that I find, Michael, is that people don't know what they can afford. And so they're like, well, yeah, we really like this. This is perfect. Wow, look at that feature. That's all said and good and fine, but doesn't mean that they can qualify to buy it. And so again, they just think, well, hey, it's just like a car. Doesn't matter. Yeah, it does. There's so many people that touch a file from the beginning part, from agency disclosure to purchase contract, disclosures, due diligence, finance and appraisal, underwriter, processing, the title companies, that it's a long process. So it takes about 30 days. You can't just drive it off the lot in 30 to 60 minutes.
Yeah. I've also, I've talked to some friends, and so about buying a new home, and hanging out with you for the last little while has taught me a few things. Not the least of which is that I've had some friends tell me, "Oh, we're going to go out and get a new home, and we're just going to look around and stuff like that." And I go, "Oh, that's cool." So they asked me, "So, do you know how long this takes?" I go, "Well, I'm not really a realtor. Bob is, but have you gone to a lender and got a pre-approval?" And they go, "What's that?"
Yeah.
It's like, well, you give that to the realtor, you're pre-approved. Now you can just go out and buy whatever fits within your budget. They had no idea they could do that. Pre-approval, what's that?
They don't. They don't. And you're right. They're just deer in the headlights. Like, I do. What does that do for me? Well, it has a value price on there. It's just saying, okay, these folks can qualify up to this amount based on this type of a loan, conventional FHA, VA, USRDA loans, rural housing loans. Anyway, whatever they qualify for, they're like, here's almost like my permission slip saying that my loan officer says that I can buy a home up to this amount that you see. Great. Hey, that's awesome. I would still personally, as the realtor, contact the loan officer and say, hey, how legit is this? Meaning, you pulled a credit score. Have you got bank statements from them? Have you got tax returns already from them? I've had people say, well, as we're out looking at homes, I'm like, well, we had a bankruptcy last year. Is that going to affect our purchase? I'm like, oh, yeah. I mean, we'll need to talk in a few years before we can get you into a home. And shame on me for not asking that up front. And I've learned that. But yeah, just some general questions that you need to find out about the consumer before really going out and showing them a home. If you're showing $500,000 homes, they can afford $400,000 or $350,000. Well, they're going to be really disappointed if they're looking at all these $510,000, $520,000 homes, and you're saying, well, we got to get down to your budget. And they look around at those homes, are like, oh, this is all I can afford? Yeah, it is. And that's one of the challenges. Can be a hardship.
Yeah. Otherwise, you'll be looking at each other. What are we going to do for food?
Yeah. Yeah. So true.
So, I see on the news, we see all these TV commercials about interest rates. These are the interest rates. And so people think, well, that's the rate. So if they go to a lender and they get a rate, should they maybe shop with another lender, or do all the lenders have the same rate?
Yeah, it's not a one-size-fits-all market or mortgage. Every other company is so different, from a national company like Rocket Mortgage to a local company like Zions Bank. There's just credit unions, Mountain America, America First. Those kind of institutions all have different programs and different rates. And it's a great thing that you brought up, Michael, because so many people are like, oh, well, what are these fees? When they go to close, it's like, well, here's how much it costs you to get the loan. What do you mean by that? Cost me to get the loan. When I bought my car, the only thing I had to do was put down some down payment. What are these other things? And they don't understand, or were not properly educated to know what that all means. Here's an example. Last Thursday was talking, or a loan officer was giving a little class, and she said, I just qualified a first-time home buyer at 5 1/8% interest rate, 30-year conventional loan. They're closing in 3 weeks. I thought, okay, well, that's all sounds really, really good. I mean, congratulations, especially when rates are 6 1/4, almost 6 1/2. The 5 1/4 or 5 1/8, man, that's fantastic. Well, she didn't say, oh, but you have to this, you have to that, you have to. So it requires an 800+ credit score. Okay, so that's a biggie. It requires X amount of income, X amount of reserves, X amount of consistent bank statements, job performance, job contract for future. If they're going to lay you off 2 days after you bought the house, not so good. So those kind of things they sound great, but you'll see some of the billboards along the highway that have the interest rate on there, and that's all fine and well, folks. But it's a hook. It's to get you to make the phone call and say, "Hey, I'd like one of those loans," and then once you kind of get in process of that, they're like, "Oh, well, yeah, I'm sorry, you don't qualify for one of those."
Yeah, or they would say, "Oh yeah, you can have that loan, but it'll cost you 3 points to buy the rate down." And then they go, "Well, what's the point?" You should explain what that is.
Yeah. A point is prepaid interest that is 1% of the origination fee of the loan. So let's just say the fee is $3,000. 1 point would be $300. Yeah, sounds about right. So if you have $300 and the $3,000, so you're prepaying interest in $900 to buy down 3 points on your interest rate. Now, that's a really, really good scenario that I've just given. Most of these, Michael, they're like $10, $12, $15, $18,000 to get it down to this rate that this gal talked about of 5 1/8, 5 1/4.
Yeah,
it's a lot of money.
Yeah, and so actually what that does is it's kind of adding $18,000 to the cost of the house.
Yes, sir.
It's not really that market value, but you pay those points down. You've actually raised the points, the price of the house.
Yep.
So that means if you ever want to sell a house, it's going to take you longer because you actually paid $18,000 above marketplace.
Exactly. Yeah, and how do and to explain that to people, they kind of do the deer in the headlights with you, like, what? No habla inglés? and you're just like, okay, sit down with me here, follow me, and let me answer some questions, but then let me review with you to make sure what I've shared, you're understanding. I just don't want to blow it over and just say, okay, well, next. And they're like, what did he mean by that? Yeah, I never want that to happen.
Yeah, that gets a little crazy.
It does.
There's some other hidden costs that sometimes first-time buyers fail to count upon. What are some of those things?
Well, they forget about. I've mentioned the reserve fund, the rainy day fund, and so they've blown all their savings. And congratulations to them for the down payment. That's absolutely awesome. They've saved. But that's all they've got. And so they go to close and like, okay, now what about the blinds? What about this? So we got to still go get a refrigerator and those kind of things that they don't always remember that they need to tackle and remember to do. And again, they just have that short-term one signature and I'm out the door kind of proposal. And it just doesn't work. Doesn't work that way.
Yeah.
Another thing that I showed or wrote down here was those emergency funds.
Oh, yeah.
Things happen. Life happens. You get up in the morning hoping you're just going to have the perfect day. Great day at the office. No problems, no issues, no manufacturing, no customer service. It's just going to be a great day, and it ends up being not a great day. And so you have to maybe tap into an emergency fund, and if that doesn't exist, you're going to grandma or grandpa, maybe the folks, maybe your siblings, maybe to a bank again, say, hey, I need more money. And you start getting yourself into a deep, deep dark hole.
Yeah, that's important. So, Mr. Bob, I understand that you have a delightful new listing you'd like to share with us today.
Thanks, Michael. These folks actually called me.
No way.
Yeah, they forget. They didn't have to do anything what we just talked about. They were on board and say, hey, bring a sign. Let's do this.
Oh, that is so awesome. So let's see if we. Oh, there it is.
Yeah.
That's a delightful place.
So this is. You and I are both very avid golfers, and going up to the Green Springs Golf Course area is where this is located at. There's a couple 3 sections of Ent's homes that were done a number of years ago. There was one called Laguna. There's one that's called Monte Verde, and there's this one called Las Entradas. Las Entradas and Laguna were both gated communities. Now you go to Las Entradas and the gates are open. I mean, it's not like with security guy and canine and that kind of a thing. It's just more of a presence and a welcome. But they do close the gates during the evening time and night. Like a lot of people like that because they may use it as a second home.
Okay.
So this street is called Canara Court, not Canary.
Canara.
And so we have a very nice 3-bedroom, 2-bath home. This is in an HOA. I'll get to that in just a little bit. The great room type of feel where you can see the dining, the kitchen, and the family room all in one place. And then we get into the next photo where we've got a nice kitchen. Plenty of storage. You see the staggered cabinets that are there. Nice stainless refrigerator that stays. A bar eating area. And I like the bar because you could do buffets there and place the casseroles and the peas and the rolls and that kind of a thing. And then have your entertainment elsewhere. Great bathrooms. They're just tip-top, clean as a whistle. The whole house is just really, really spotless. Very well taken care of. And then along with that, you have a nice, very large covered patio.
That is
now,
nice.
the fencing back there just leads over the fence into another area or subdivision of Las Entradas. So it's not fully fenced in where the pooch gets, is able to be fenced in. They have to have that area open there in the backyard. And then we get into the garage. Now, the garage is kind of cool because it has multiple 220-volt outlets. It has a couple of 140s, obviously a number of 110s. This guy was Joe Mechanic, and so he loved to do things that were kept him busy, kept his hands going, and so you've got storage galore, and then you've got these other cabinets and areas. And then if you kind of look in the middle of that photo, it's hard to see, and I'm trying to get it to work, and I don't know how, and this owner has passed away. There is a golf net simulator that comes down from the ceiling and drops down where you can kind of hit balls into the net and have your own little driving range there in the garage.
Really?
So really kind of cool. It has its own heating and air conditioning system in there too. And so, if you get a scolding from your wife and says, "Get out of here," you might just go out in the garage and hit a few balls.
That's nice. That'd also be a great place for band practice.
It would, very much so, because you got the climate control inside and out too.
Crank that up.
So last photo on this particular home, it's got, like I say, amenities. You have a clubhouse. You have an indoor pool, an outdoor pool, as you see here, a couple of tennis courts, fitness center. There's a large banquet room, so if you have hosting of guests or family for, say, Thanksgiving, they have plenty of room there where you basically just pay a deposit and cleaning fee. And then the yards are well taken care of and maintained by the HOA, front, sides, and back. So like I say, you can come and go wherever you want to, and no matter what time of year or time of day, it always looks the same.
It's a beautiful place.
Yeah.
So, Bob, because that place looks so great, do you think we can just skip the home inspection on that thing? Let's just forget it. It looks good. It's got a driving net in the garage.
You're starting to give me the willies here when you bring that up. Michael, it's the best $400 one person could spend in the purchase of a home is a home inspection. That $400 will reveal things that your eyes, my eyes, have no clue about. Even the seller of the house may not know. Even having lived there for 10, 20, 30 years or 2 years, whatever, you got to find out the nitty-gritties about the house. We did one, or had one done about a week ago. It was a page and a half long of one-item bullets for 1.5 pages of issues that the buyer was made aware of that they had no idea. And so that $400 helped to save them over $30,000 in potential repairs.
Wow.
Yeah. So never, even if it's a new construction home, folks, never not do a home inspection.
Yeah, that's important.
That is vital.
Yeah, otherwise, well, you run the risk of underestimating any repair or renovation costs.
Yes.
Like, well, this place looks good, and no home inspection, and you think there's no additional hidden costs or fees. Next thing you know, you've got $30,000 in unexpected repairs that have to go on.
You and I don't talk to our water heaters, I hope. We don't do that. But literally, there's many people that find a situation that shortly after closing, I mean, within days, week or two, something goes wrong. And so the water heater goes out and says, I'm done. You no longer can use me. And now those are $1,200, $1,300, $1,400 replacements.
Yeah.
So again, have the opportunity, take advantage of the home inspection as part of your due diligence before purchasing a home. It'll save a lot of headache down the road.
But Bob, I'm so emotional about this house. I love this house. I just have such a good feeling. I just think we need to live here. So is that something that people do? They just forget all this other stuff and they fall in love with their emotions and they just buy it anyway? But no, wait, that never happens, does
No,
it? No.
you poor man, and Linda
That
as
never
well.
happens.
That this is like, oh, but this feels so good. We can just feel the feelings and the warmth and the
vibe is
fuzzy
cool.
vibe.
Yeah.
Exactly. I'm sorry, Michael, you got to put all that away. And that's really hard because you're decorating where the couch goes and the lazy boy and where the bed's set up and where the pot is with the pampas grass and all that other thing. And you're already mentally moving into a home that you will eventually buy. And you forget, but this is somewhat of a living, breathing machine. This house, it expands, it contracts over weather. It has mechanical moving parts. It has plumbing. It has so many working fixtures to it that, boy, you gotta be careful with that, and again, then enjoy the house.
Yeah.
But make sure you kind of put emotions aside, think logically, because this is a lot of money. When I find people that say, "Oh, we hired our neighbor," well, how long have they been in business? About 5 weeks. And you listed it for $700. You're risking $700,000, more or less,
Yeah.
for a neighbor who's been in the business for 5 weeks and doesn't know what they're doing.
Yeah.
What a shame.
So let's do a quick summary. We've
Okay.
covered a lot of ground here, so we have to set a clear budget. We need to get pre-approved,
Right?
Otherwise, we're kind of
Wasting everybody's time.
we need to have a reserve fund in addition to the down payment.
Yes, sir.
We need to get a professional home inspection.
Mandatory.
Be prepared for for maintenance costs, even if they don't think you're going to have any, because it looks so good. And it's okay to love the house, but don't lose perspective. You love it, but you won't love losing $700,000.
Right. And if you've never seen it before, the resource that we always talk about, Michael, you and I, is the movie The Money Pit. If you want to be one of those kind of couples, well, okay, you can, but what a shame. How things could certainly be better. And the other thing is, the most important, give me a call.
Yeah, Bob, do you actually have one of those, what do you call them? Oh, I know, telephones?
Telephones,
Oh
yes, I
my
do.
God,
It's even
technology.
no cord, all that other good stuff.
I'm
435-703-8824 is my number. It's 435-703-UTAH. Bob@buyutah.com is my email address, and buyutah.com is my website address. Isn't that cool? It wasn't randomly. That was spot on, deliberately.
It's like you actually planned it.
I did, yeah.
And I want to remind everybody that your podcast, Let's Get Real, is available on YouTube.
YouTube.
I said Utah.
Yeah.
Because we're in Utah.
That's right.
We're going to let that ride.
Sure.
YouTube. And it's also available on all the other major podcast channels like Spotify and Amazon, et cetera, et cetera. It's also on your website, which is buyutah.com.
And I'm with Berkshire Hathaway in St. George. That's the brokerage that I hang my hat under. And so we're right just in the downtown part of St. George on the boulevard in Maine.
Do you have any associates?
I do, yes.
Hence the name Bob Richards and Associates. Oh,
yeah.
gosh.
Yeah, isn't that great? Kind of cool. People actually like to work with me.
Oh, I'm so
They
excited.
really like me.
Well, guys, give Mr. Bob a call. He's the man that you want to talk to, whether you're looking to list or sell, especially, we've got some folks down in other states like California and things like that.
Northwest.
Yeah, people are looking to relocate to St. George.
Yeah.
So be sure and give you a call.
Thank you.
And I want to remind the folks that if you're watching watching the podcast on YouTube or something, that Bob has he has a whole library of the podcasts, all the information you need to know about what's going on in the market in southern Utah. Check out all those podcasts, and we'll see you guys again next time with another exciting edition of Let's Get Real. Thank you, Mr. Bob.
Thanks, Michael.
Thank your associates, too.
This has been Let's Get Real with Bob Richards from Bob Richards and Associates. For more information, buyutah.com. We invite you to return again for another edition of Let's Get Real with Bob Richards from Bob Richards and Associates.